I see a lot of people putting a lot of emphasis on the value proposition, that pitch, and the importance of a story, some kind of hook that brings people in and intrigues people, but they spend far too long without being precise and to the point, by which time they've consumed half of their time and the really good stuff that I would like to hear more about, because I've been an investor in the past myself, very small, but I miss out on all those details. So I'd like to hear from you, in your words, what you think people are, where their focus is in terms of the content they include in the 5-minute value proposition, and where you think they should be focusing in more.
When it comes to pitch, it's true that it's a big challenge, for entrepreneurs, and they spend a lot of time on it. And I think the major challenge is not to build a huge story around the business opportunity, although it's important that you have a hook, as you were commenting before. For example, the hook is a tool for you to lay out the value prop and how you can build a business. But it's not the center, it's not centric. It's just make sure that you will have the attention of your counterpart during the next 3 minutes. But at the end of the day, for a pitch to be successful, you want to cover the basics, selection criteria or pre-selection criteria of the investor. And at the end of the day, the challenge of the investor, when you listen to a pitch, it's very easy. I'm going to dedicate those 5 minutes, if this is interesting, and see if I will dedicate 1 hour or 30 minutes at a certain amount of time during the next week or the week after to that specific individual. I'm not taking the decision if I'm going to invest or not. I'm just taking the decision, will I spend 1 more hour with that person? So that person need to go over my selection criteria. So that would be the typical ones, you have 6. This is market and accessibility to that market.
Yeah.
Show that you are access to the team, why you, the competitive advantage, if any, or at least some kind of differentiation. Growth and scale, of course, more scale than growth. And I'm just with 4, so I need 2 more. One is momentum, which is a very easy question to answer on one side and very difficult to the other side. On the previous side is why all the people before that are as smart as you are and as smart as I am were not that successful with that same opportunity before, and how you can explain that. That's the easy part. The hard part is why not wait more? And then, so that's 5, it's, and then if we have those 5, we should have what is the more important, which is there any predictable potential way for me to exit? Is there a way that I can imagine as an investor that I will be able to take that money out, and hopefully with a nice multiple? That's what should be.
Do you think that the exit part should be in the pitch, in the initial pitch? I'm kind of split on that one, whether or not that's something they really should be focusing on at such an early stage.
I don't think it should be part of it. I think it's the consequence of the 5 previous criteria. Right. If you are scaling and you have the team and you know how to access the market, etc., then there will be a way for me to exit if I invest now. But I'm not a fan of, we're going to sell to Facebook or Google and for 200 million within the next 3 years.
Yeah, sure.
Doesn't make any sense. We don't know what's going to happen. So I'll say to the exit.
I think what you've described there initially with what you were describing about I'm not going to make a decision whether I'm going to invest on the basis of your pitch. The way that I always frame it and the way that I've looked at it is that it's about investing another hour. Shall I invest another hour to hear what you have to say? So from the founder's perspective, I think the misperception is I think everything rests on this value proposition, that 5-minute pitch. And as I try to educate people to look at it more of an interview, to get to the next round, to get to the next conversation. It's always sequential. Nothing ever happens in one fell swoop. So it's always a series of steps. You're doing your due diligence from the investment side. They're doing their I guess, their presentation in a series of steps that reveal ever increasing amounts of information. And obviously you start off small, and as you spend more time, you go deeper into it. So you spend more time doing it.